First of all, tapering faster is a much less blunt instrument than raising rates. And we handled the beginning of the taper just fine in the early November, hearing that announcement. Now, I was happy to hear Bryn say that she wasn't buying more ARK just because there's blood on the streets. I think that we're set up here, just as the calendar is going to show us. We're going to get CPI data on Friday. I don't know that the market's going to love that. And then next week, Wednesday, we hear about what the Fed thinks. If they announce that they're going to double the pace of tapering, and if they put out some projections that are going to cause them to be more hawkish, and we get a hawkish dot plot, I think all of these things are very possible. We're going to see more volatility, especially in those high growth names. I don't think that this is the time that you dip into that and buy that particular pullback. I think you have to wait it out. This time, though, if you get a beta sell-off in the market because people are afraid of rate hikes, that's an opportunity to dip into the stuff that should do well in 2022, the things that are undervalued, because this is going to be a situation where valuations matter. So things like energy, financials, industrials, even small cap. I would go small cap value in that trade. And that's what I would do if we get a broad-based sell-off on Fed news.
So, Rot, this all happens, of course, as we're trying to figure out if Santa Claus is going to show up in the market for a Santa Claus rally. Ed Yardeni comments today, should I stay or should I go? He says the answer is stay. Investors should stay because profits are likely to remain strong, he says, but they should go if they fear that tighter monetary policy will depress elevated valuation multiples. We're inclined to advise staying. Tom Lee says we're going to rally into the year end. Sarat.
Yeah, I mean, look, I think, to Liz's point about a beta sell-off could happen, but I think that's the opportunity. And I think for investors to be positioned properly, which is to go where earnings are going to grow. And the market's telling you today that they think these sectors that are going to be interest rate sensitive are going to do well. Some of the industrials, the energy, the financials, exactly. Even some of the healthcare stocks that have been so beaten up. So I do think there's opportunity elsewhere in the market. And we've had such a good run that it's okay to take some profits and to reallocate. The other part, Scott, is that, look, if tapering starts happening, the credit markets are going to start opening up, and investors are going to start reallocating and looking at potentials in credit as well, because right now there's no clearing price in credit. The Fed has bought everything that anyone wants to own.
I don't know.
So I think there's going to be opportunities there, too.
Unless you think the Fed is going to make a big, giant mistake by going too fast, which brings me lastly to you, Leisman, is how in the world we got here in the first place. I mean, how do you go from what I had suggested in weeks prior was the most telegraphed taper ever to all of a sudden saying, well, Powell might have made a mistake last week when he spoke publicly on the Hill. Is he going to clean up the mess he might have made? And now we're talking about doubling the pace of something that seems to be a surprise to a lot of people. How do we get from A to B?
It's a big shift, Scott, but I think what the Fed would say is you got to go back to the data. The data surprised them in ways, and the idea that the inflation turned out not to be transitory anymore. They think they have to get serious about inflation. I just want to say Liz Young gave the perfect rundown of what precisely is going to happen on the day the Fed comes out. They're going to come out, they're going to they're likely to double the size of the taper. They're likely to project more rate hikes next year than is currently in the SCP. And I think there's going to be hawkish talk from a Fed chair preparing the market for that. But here's the question. I don't think the question is whether the Fed is going to double the taper, or the question is whether or not they're going to hike rates next year. I think both those are baked in. I think the question is, how tough is that outlook for the markets? If you're talking about 50 basis points next year amid an economy that's going to grow and grow pretty strong, an unemployment rate that's going to come down, and then the best part of this, if it happens, if you talk about inflation coming back under control come the summer, 50 basis points, 75 basis points. Remember, Scott, we went into this at a 175. We're still at 25 basis points with an economy that's about the same size as it was before we got into this pandemic. So I don't know. I think thinking through the consequences of what's going to happen is a probably more important investment question to ask than actually what's going to happen, because I think it's coming.